Hey guys, welcome back. You're still tuned into Trading Hour on CNBC TV18. The market is still seeing sharp cuts, and a lot of these stocks are being really sort of dissed for their performance. So while you are seeing good performances also being rewarded, a lot of companies, the likes of Dixon Tech, you have even something like a Patanjali Foods, which is seeing sharp cuts after their Q3 earnings, really disappointed the street. So let's actually get that corporate conversation going then. Patanjali Foods is under pressure. It's down 5% reacting to Q3 earnings. The overall margin has improved sequentially, but year over year, there has been a sharp decline. In fact, the foods and FMCG business, while it continues to surge in contribution to the overall pie, that segment has seen a sharp drop coming through in the margins. So it's actually down to 10.3%. This is for Q3 of this year versus 25.5% that we saw in the last quarter. So to discuss the outlook and the quarter gone by, we're joined by Sanjeev Kumar Asthana, who's CEO at Patanjali Foods, to take some questions. Mr. Asthana, thanks a lot for joining us. I want to begin by exactly asking you that, why did we see so much weakness come through in the foods business? And do you think this is something that's likely to, hold going forward as well?
So we have projected always that, we should, our margin profile in the foods business is 15 to 18%. This quarter, it was about 11.03%. So we dropped from the last quarter, but that was an aberration because it was a result of an aggressive push that we had. We had a big boost in the sales of nutraceuticals, and we had a big push on the sales of the high margin products in the foods portfolio. But I'm anticipating from this quarter onwards, we should be pretty much on course for margin profile of 15 to 18%. We should consistently maintain that.
Okay, so margins to get back to that 15 to 18% band on the food side. So what about the oil business? What kind of volume growth do you foresee?
So margin profile, we continue from the demand side. We are doing way better than how India is progressing. So where the demand in India is progressing at 3 to 4%, we have grown nearly 8% in this quarter. But on a normalized basis, I think if we can maintain consistently a growth rate of 6 to 8% on the edible oil business, it will be a good result. And incidentally, we had a historical sort of a month in October. And we continue to almost, our volumes have gone up nearly 35% in 2 years. So we are anticipating a strong growth, but in the broad range of 6 to 8%, where we want to sort of do better than what the country is doing. And in that direction, I'm anticipating that the edible oil business should be on a strong trajectory as we continue to build on the brands and the distribution on that side.
Can you quantify that for us? And what can be an expected sustained rate of margins in the oil business?
So margins, as we've always maintained, that the profile is between 3 and 4% is what we should make in the business. This quarter, we did about 3.35%, and we expect that should be pretty much in that ballpark range.
Okay, should be in that same range. Mr. Asthana, if we're talking about the edible oil space, can you tell us what is the market share that you saw in Q3 for the edible oils, and when do you foresee reaching that double-digit kind of level?
So market share is constantly growing up. I think in 2 years' time, we should be past the double digits. And the plan is that we go towards, 2 lakh tons of sales every month, and which pretty much will put us closer to between 10 to 11% market share. And that is pretty much a safe territory for us to be in. But this number, we should be able to do it in about 2 years' time. It's not that next year we would be able to put that number on. Because the idea is that volumes, growth is not sufficient. The core requirement is that it should be growing profitably. So that's the main purpose of our, main objective in the oil business.
Fair enough. Could you talk about your other verticals? You had 1,000 crore revenue target from Nutrela and about 1,400 crore from biscuits. Do you think you'll be able to achieve it? What's the progress?
So this, for example, this quarter itself, our food business is already 20% of the revenue mix. I'm expecting that every year it should continue to grow. So for example, foods is growing at 15%. The range is different in different segments, but overall a 15% growth rate we are targeting in foods. And on the edible side, between 6 to 8%. So over 5 years' time, I think broadly we should be pretty much there. That 50% of the revenues will start flowing from the food business for us.
Okay, Mr. Asthana, what about expansions in the palm oil plantation side? What exactly are your plans? And how much could this perhaps aid your top line?
So oil palm, as I mentioned, we currently have 64,000 hectares in the plantation. Every year on a regular run rate, we are adding 6,000. Next year, for example, we'll add 25,000. The year after, we'll add almost 100,000 hectares. So most of the, the kick-in of the revenues of the new plantation will happen after 5 years, 5 to 8 years when it starts to kick in. But on the regular run rate, we are seeing a consistent growth of between 5 to 10% as the new plantations continue to the plantations which were done 5 years back, they continue to start doing that. So we're expanding our capacity at the 2 units that we have in Peddapuram and Ambapuram. We are looking at new sites in Visakhapatnam. We are looking at an additional site at Telangana. We've already committed to put up a plant in Arunachal Pradesh and Pasighat, and we're exploring sites in Mizoram. So that is going to be a large push on the oil palm plantation side. Results you'll see in 5 years' time, but a regular growth of 5 to 10% year on year, that continues in the oil palm business irrespective.
One final question then. Sir, promoters own about 80.8% stake in the company. Will there be further dilution? If yes, by when?
So we are actively working. We are, waiting, for the quarter three results, and now they're out. So we'll now start working toward the marketplace. Our deadline was 31st December. We sought an extension, but we're expecting to complete it very soon because there's a lot of interest from investors to participate. So we should pretty much be on course for that.
Thank you very much, Mr. Asthana, for joining in. That's Patanjali for you. By the way, markets are again grinding lower, now back to the low point of the day. The low today was 17,667, and we're just about 6 points away from that. It will be a good time to invite Mitesh Thakkar of earningswave.com to find out what the charts are telling us.